Right then, afternoon, everyone. Welcome to another week of trading on Monday, the 1st of July. We're into Q3, start of Q3, so out of Q2, obviously, and into the second half of this year, and pretty action-packed week to kick off Q3. Obviously, we had the US elections, or the first of the battles, we'll say, between Trump and Biden. Last week, back end of last week, we've got in the UK general election this week. We've had the French general election over the weekend, and obviously we then get non-farm payrolls on Friday out of the US. But we'll start with the calendar. Markets might take a bit of a backseat, or the calendar might take a bit of a backseat this week when we got the other things we need to contend with. But it is a bit of a broken up week with the holiday in the US, July the 4th. I'm seeing Independence Day on Thursday out of the US. You'll get a bunch of US markets shut, not get any US data out on that day. So not much, probably not much we can do, certainly afternoon on Thursday, but markets might hop about a bit off the back of the UK general election. But at this moment in time, sterling is up and taking a bit of positivity off. But we'll cover that in a minute once we get around to it. Manufacturing PMI today, first thing we're going to look at, has been pretty negative over the last couple of years. Hasn't been above 50, or it's been above 50 once since October of 2022. So I mean, US yields had a bit of a pop higher back end of last week off the back of Trump, you would think, and then a US dollar a bit of upside off the back of that, some stocks a bit of upside off the back of that. So some positive manufacturing figures today. We're probably going in line with that. And you've obviously got 49.1. So these pop back down to 48.7 after it was above 50 the month before, down to 48.7. Expected to come back up to 49.1. Over the month of June. So that does go in a B consensus. You're likely to see US related assets pop higher. That's probably what you're going to have to look for when it comes to the manufacturing PMI a little bit later on today. Jerome Powell speaks at 2:30 tomorrow. You'll have a bunch of speeches from a bunch of central bankers. The ECB's forum on central banking is over the next couple of days. So you got Christine Lagarde at 8 o'clock today. She'll speak a couple of times. You've got Jerome Powell at 2:30 tomorrow. And the fact they are talking on central banking would mean we got to keep our eyes out, or our ears out, should I say, for any comments we hear about anything to do with monetary policy in the respective countries. Again, you can't kind of predict these things ahead of time. You just gotta sort of wait and see and wait for these things to come out. You do have the minutes on Wednesday. Again, that probably likely to take a bit of a backseat. It'd be interesting to see how many of the market participants that thought that interest rates should be talk about interest rates. I mean, in the US, they did say at the last interest rate decision that some were unsure as to how many cuts we should get this year. We obviously got inflation that is kind of struggling to come down when it comes to the US. You had the most recent dot plot still indicating a couple of cuts, or one cut through to year end, and then an increase in the cuts then going past that. We'll have to see how many of the members kind of agree with that or disagree with that, and see what they're kind of looking for individually for monetary policy going forward. But I can't imagine too much surprises out of that on Wednesday. You then got non-farm payrolls out of the US on Friday, but we got some things we need to cover before that, so we will break that down once we get around to it on Friday of this week. But as I said, July the 4th on Thursday, so probably Wednesday, Thursday, Friday, maybe slightly thin trade as we come into that holiday in the US. But over the weekend, France, I mean, once there was kind of thought that Le Pen and her side of the government would get into power, Emmanuel Macron called a snap election. That snap election then came yesterday. But big downside across the CAC 40, big downside across the euro when that was first brought out. A bit of uncertainty to do with government, and obviously currencies don't like any sort of political uncertainty. So that was then a sell-off, and the fact that for business in France, I don't think they quite like the fact that you will get a change in government. Obviously, Macron's government is a lot more pro-business than the likes of Le Pen's will be. So a bit of a bounce back in Europe today, bit of a bounce back in the euro, bit of a bounce back in French stocks and European stocks, kind of due to the fact that they may not be, it's not as overwhelming as a vote as they initially thought. The fact that have full control over the government probably is a bit more of a positive for France if you're looking at the way assets are pricing it. So the fact that they're probably going to struggle to get a full majority is has been taken as a bit of a positive from traders of French stocks, and then the euro as well. Euro back lower a bit today off the back of German inflation at 1 o'clock, down below consensus, or below consensus, and that is I mean, it's more of a positive for the economy, and certainly in terms of monetary policy, it's not too positive for the euro. On to then Thursday, the UK general election. Not really too many surprises. We are expecting Labour to win for the first time in a while. So, I mean, the fact that it's expected for Labour to go and win, and the Tories are not due to put up much of a fight when it comes to Thursday's polls, is that, again, as I said, markets don't like political uncertainty. So the fact that we kind of do have a bit of certainty when it comes to Thursday, probably a bit more of a positive for sterling. Now, historically, Labour wouldn't have been too positive for sterling, but they're a lot more pro-business. They've got some new policies where they are more pro-business. They want to, grow the economy and stuff rather than take and give, if you want to call it that, from years gone by. So, I think the fact that it's going to be Labour and probably going to be a majority Labour is kind of a positive. Whether it proves to be a positive going forward is a different question, but markets taking that as a bit of a positive. And if that comes to fruition, you're probably not likely to see much volatility in sterling. You're probably likely to see it strengthen a bit, but nothing majorly. Where it becomes a bit tricky is if they do not get a majority and it's going to be a hung government, and there's then troubles going forward of the kind of policies that they can settle on, right? That again brings political uncertainty, and it comes back to the fact that if you do get political uncertainty, likely to be negative for the currency. So if it comes around to Thursday, and then Labour get a majority and it's a clean sweep for Labour, then look to be long sterling. I would think if it goes the other way and they do not get a clean sweep, you would probably look to be short sterling off the back of that. Right, that is likely. You're likely to get those kind of answers later on Thursday, possibly Friday morning, and then I guess we'll have to see how that pans out on Thursday. But on the balance of probabilities, probably be long sterling into that. Obviously, you got the stop loss and stuff, and that's what they're there for if it goes wrong. Then it brings us on to non-farm payrolls on Friday, but we got a lot of things you got to get through before we get to non-farm payroll. So a pretty action-packed week. Got political uncertainty in numerous of the big countries. You've got it in Europe with France, you've got it in the UK, which is then obviously sterling, you've got it in the US, which is the US dollar. So the three major currencies all have political uncertainty at the moment. It's not something you get too often. So a lot of stuff we got to keep on top of. Does that make for great trading conditions? Not really, but we'll keep an eye on these things as they pan out over the week, and we'll be sure to update you as and when we get to it. But best of luck out there this week. Hopefully you can make a few predictions right. We will make our own each morning for the rest of the week.